But most importantly, from a risk manager's perspective, Bitcoin is the best asymmetric trade opportunity and investment opportunity that I have ever seen in 35 years of managing risk.
Hello and welcome. This is the Daily Crypto. The Fed is taking drastic measures to keep inflation from increasing, but one thing that is certain is that inflation will not be below 5% in the next 24 months. What will this mean for the dollar? Is the end of fiat currencies near? What role does Bitcoin play in all this? Keep watching to find out as we answer these questions with the veteran Greg Foss. Unlike many players in the industry, Greg sat in the risk chair, so he understands the value of risk management, but also has a really interesting framework for Bitcoin. So how did Greg come to find Bitcoin?
So they had lost 75 cents on the dollar of their 5-year loans. Now, I did a quick calculation before going into the Brady bonds of the Royal Bank's total exposure to Latin American debt and lesser developed country debt. And a back of the napkin analysis, Rob, that anybody could have done quickly showed me that the Royal Bank of Canada was insolvent, which, for those out there, just to be clear, it meant that their book value of equity would have been vaporized if you had written down all the value of their lesser developed country debt to the market trading price. Hence, Treasury Secretary Nicholas Brady said, whoa, we have a big problem, because it's not just Royal Bank of Canada, it's the entire global banking system was insolvent. Now, here's the kicker. I'm only 20-something years old. I'm coming right out of school. I go to the CFO and I said, his name was Emil, we have a problem. And he looks at me deadpanned and goes, I know, don't tell anybody. And I'm like, what the absolute F? Like, I just got out of school and I'm working in this thing called a Fiat Ponzi. Now, fast forward 30 years, you mentioned you got involved in Bitcoin in 2013. Mm-hmm. I was introduced to Bitcoin in 2016, where I actually did some work on it.
Foss indicates that Bitcoin is the solution to the fiat Ponzi. He continues.
From a credit perspective, I'm a credit risk trader. I view Bitcoin as being the perfect insurance against the fiat Ponzi. And we can go into that, but most importantly, from a risk manager's perspective, Bitcoin is the best asymmetric trade opportunity and investment opportunity that I have ever seen in 35 years of managing risk, okay? So you got all these talking heads out there that think it's a Ponzi, blah, 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 because they haven't done any work. The real Ponzi is fiat. We see this again and again as the global financial system is regularly insolvent and it is bailed out by central bank printing. Bitcoin is the best asymmetric investment opportunity I have ever seen in 35 years of managing risk. And that's why I'm passionate to spread that view to people and their children who need to understand this.
But in thinking about fiat as Ponzi, it really gets into the difference between nominal and real returns, right? What are the Ponzi-like dynamics of fiat?
So a bank is, everyone thinks your bank is so safe. And to the extent they're not wrong as a depositor. But understand first and foremost how a bank works, okay? A bank will make, for a $100 loan, it only holds about $6 of equity capital, and the other $94 is depositors' money and subordinate debt. Now, over the period of an economic cycle, I can promise you there are many times where the book value of equity of that loan will fall by, the value of that loan will fall by more than $6, which means the equity or the risk absorbing gets vaporized. Okay, that is the Ponzi itself, because banking only works if you can lever it 20 times, because no one will lend with zero leverage. The returns don't, on a risk adjusted basis, unless you can use leverage in banking, the equity owners would never invest in bank stocks. Okay, you need to use leverage. So, as Henry Ford said over 100 years ago, if the average American understood how the American banking system worked,
there'd be a revolution.
There'd be a revolution in the morning. Okay, and that's based on of that fact.
A lot of depositors have tremendous confidence that the banks are too big to fail, hence they will be bailed out by the Fed, and Greg points out that that is a Ponzi. He asks, how do you create a system that has no natural risk mitigating system for investors? Greg adds that this is part of the inherent problem. In thinking about Bitcoin as an asymmetric trade, how do we define that? How do we size the upside, and how is it generally skewed?
So everything, first of all, I look at everything through a credit lens, as I've tried to lay out. But let's take this a step back and look at what the total global pie is, your total global addressable market, okay? And I start with a number of total global financial assets of over US dollar 900 trillion. Okay, that's your total global financial asset pie. And of that, 400 trillion is global debt, and 300 trillion is global real estate. Okay, and then 100-ish trillion is equities, and the balance is commodities and fine art and all sorts of other, when it comes right down to it, gold. Okay, gold's 10 trillion. Like, who cares? It's a bit of a rounding error. But 900 trillion is your total global financial assets. These are numbers from the Institute of International Finance, okay? And a lot of people say, oh, why are you including debt? Well, heck, I spent my whole life in the debt markets, okay? That's what you got to start with, okay? Don't net out debt. So you hear all these other guys using numbers like 400 trillion. God, these are equities.
It's an enterprise value. From a credit markets background, learning enterprise value is inevitable. Greg Foss thinks there is a high degree of likelihood that Bitcoin becomes the global financial asset reserve of the world, supplanting U.S. treasuries.
If that in fact is the case, and I'll mention further why I think that'll be the case, it has a link to to oil and pricing of oil. But stick with me, 5% I think is not a crazy number for Bitcoin to capture the total global financial assets. 5% of 900 trillion in today's dollars is $45 trillion today. Divide that by 21 million. What do you get? You get over $2 million US per Bitcoin in today's dollars. That is a target. It's not a limit. And I'm not giving you a time frame on when it gets there, but don't forget, I'm measuring it in today's dollars. Okay, that's your asymmetric target upside. It's currently trading at 20,000. Okay, what's 20,000 divided by 2 million? 1%.
Yeah, you're looking at 100.
The market is telling me right now, Foss, you may be a lunatic, but I'm only giving you a 1% chance that your price target is right. And I'm not telling you guys I'm 100% certain I'm right, but I am telling you I'm way more confident than 1%. So buy the stuff with your eyes closed as insurance against this fiat Ponzi unraveling.
Is it possible that the market is describing a 99% chance that it is zero?
Binary outcomes, A or B, nothing in between. Okay, yes, you're making the exact assumption that, or the exact correct expected value calculation using a 99% outcome of a zero and a 1% outcome of $2 million Bitcoin. But what's the truth? Well, the tail on Bitcoin goes far further to the right than just $2 million. Now, the good thing is Bitcoin is bound at the lower end by zero. And what's the chance it goes to zero now? You can argue, well, it's not going to go to zero. Would it go to $100?
A lot lower.
Let's just understand that this math makes it the most compelling and simple argument as to why you need to do some mathematics to learn risk management. Again, I'm not 100% certain, nor do I tell you to put 100% of your money in Bitcoin. What I do tell you is get more than zero. And what is the right number? Well, this depends on every individual in the risk management share. My personal number is over 10%, but less than 40%. There's a lot of crazed Bitcoiners on Twitter that think that I'm some sort of little, weak little limp-backed guy because I don't have 100% of my money in. And I'm like, guys, I don't need to have 100% of my money in. The asymmetry of the trade will ensure that I will participate in the upside. That's the beauty of it.
Foss claims that he owns gold and real estate, but not bonds, because bonds are, in his opinion, the worst he has seen in his 45 years of managing risks. Greg states that the reality is the expected default rates are way too low and nominal rates are way too low to actually reward investors for the defaults that are coming. Greg Foss continues.
You have four borrowers: Ford, General Motors, AT&T, and General Electric, that are right on the cusp of this subjective fallen angel cusp of investment grade down into junk or high yield.
Right.
The combined debt of those four borrowers is larger than the entire high yield market as it exists right now. And if they got downgraded, they would overwhelm the ability of the high yield market to absorb the forced selling of investment grade managers. Investment grade, another term that has no subject, no quantitative value. It's a subjective value. What makes something investment grade? Oh, the rating agency says it's investment grade. How do you determine an investment without looking at its price? All of these things are part and parcel of the fallacy of this fiat Ponzi that is built on top of regulatory authority that leads me to say, if you own 0 Bitcoin, go and work for Peter Schiff, okay? Because he needs idiots to work for him. Listen, he's the knucklehead that didn't even understand that Puerto Rican banks have capital guidelines.
Thanks for watching this video. When do you think Bitcoin will hit new all-time highs? Let us know what you think in the comments section below. Don't forget to like, share, and subscribe to our channel. See you on the next one. Until then, bye.